Tesla just reported third quarter 2024 earnings results, and by and large, the numbers look pretty good. The company had a huge increase in free cash flow. Revenue was up a little bit. But as always with Tesla, you've got to dig into the numbers to really see what's going on. I think what we're generally seeing is a ton of strength in energy storage and then what they call services and other. So that's a whole bunch of things. That's things like FSD, it's their charging network, it's services that they're performing on vehicles, on used vehicles. So if there's an accident or if there's some other service that needs to be done at a Tesla service center, that falls under that category. But the core auto business actually isn't doing particularly well. So I'm going to dig through all the numbers and kind of parse this business a little bit more to give an idea of where there's points of strength and where there's maybe points of weakness, what we can expect going forward, because they did give a little bit of guidance for the fourth quarter. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's jump right into the numbers. So I'm going to go right into the detailed numbers, and I'm not going to compare these to analyst estimates. You can go find that elsewhere, but they missed analyst estimates on the top line, did better than expected on the bottom line. I'll go through some of these numbers in detail to sort of put some of that into context. But the first thing that I want to look at is auto sales. So this is broken up into a few different things. They have their leasing, that's the third line here. Regulatory credits. This is actually where there was a ton of strength, $739 million in regulatory credits. These are sold to other automakers who need to buy credits to offset their ICE vehicles. What is a little bit strange about this is this number keeps getting bigger for Tesla, but we don't have any real details behind it. Who's buying these? There's speculation that a lot of them are going to Volkswagen. Is that going to change in the future as Volkswagen ramps up more of its electric vehicles? We don't really know. So I always pull this specific line item out, despite the fact that it is a very real number, but it's not necessarily something you want to count on being sustainable forever, although it has been sustainable a lot longer than I thought it would be. So what I want to look at is the automotive sales number. So $18.8 billion, and that's up 1.3%. So barely an increase from a year ago. Why is that important? Well, if you look at vehicle deliveries, and revenue would be generated based on deliveries, this is a year ago. This is the most recent third quarter numbers. Deliveries were up a little over 6%. So that's telling you that Tesla's revenue per vehicle is declining. There's just simply not as much pricing power that Tesla has in the market, despite the fact that vehicle deliveries are essentially flat. Now, management said they're also going to be introducing another low-cost vehicle sometime next year. We'll hopefully get more details on that on the conference call. I'm recording this before the conference call, but that could actually put even more pressure on the top line. But the costs were actually what was a little bit more alarming. But the costs you see here, costs didn't increase quite as much as automotive sales did. So 0.6% increase in costs, about in line with their total sales. So margin increased a little bit, but what that's also telling you is this regulatory credit margin is going to flow disproportionately to the bottom line. So that's why you're going to see margins increasing for the business overall, or at least that's one of the factors. The other big factor is this line here. Energy storage. Energy storage is becoming a pretty big business. It was down sequentially to $2.4 billion, but up really nicely from $1.6 billion a year ago. The gross margin also increased from 24% to 30.5%. So nice increase there. We see similar trends with services and other. And again, that's going to be a grab basket of all kinds of different stuff, but a big increase in revenue, $2.2 billion a year ago, $2.8 billion this most recent quarter. Not quite as profitable as you might think, especially given all the things that are included. A little over $200 million in margin there. But you add all these things together and you have an increase in gross profits of about $800 million to almost $5 billion in the quarter. And then Tesla is actually spending less on R&D and SG&A expenses than it was a year ago. So those cost cuts that the company has put into place, remember they had some layoffs a few months ago, that is starting to impact the company's bottom line. That's why you see a big increase in operating income to $2.7 billion. But I want to also go to the cash flow statement, because this is where you saw the huge improvement in the last couple of quarters. $6.3 billion worth of operating cash flow for Tesla in the most recent quarter. That's up from $3.3 billion a year ago. And things are basically flat in the first quarter of 2024. So what is driving this? Well, we do have the increase in net income, not a huge increase, but about a 10% increase in net income. But here are the big things. Instead of deferred income taxes declining, deferred income taxes are increasing. That means that there's taxes that Tesla owes in the future that they are deferring. They get to keep that cash, $285 million there. You have these two line items, and this is where Tesla is a little opaque in all of the things that go into this, but other and changes in operating assets and liabilities. I'll show you what this is, but that's over $2 billion. So $2 billion of their free cash flow is just changes in the balance sheet from other and changes in other assets and liabilities. But Tesla is also investing a lot of money in building out particularly their AI infrastructure. That's why their CapEx is going up, $3.5 billion. So they're not spending as much in OpEx, spending more in CapEx. So some of those things are a little bit opaque and not necessarily consistent. You want to see cash flow from the business, not cash flow coming from balance sheet items. The other thing that Tesla doesn't talk a lot about, and like I said, I'm recording this before the conference call, but is the subsidies that they get, especially on the battery side of things. I mentioned the increase in margins from batteries, but a huge part of that is the fact that they get the subsidies from the Inflation Reduction Act. This is something that Tesla doesn't call out as much as most of its competitors. If you look at something like First Solar's increase in net income over the past couple of years, they will basically say more than half of our net income comes from the fact that we get this huge subsidy from the government. Tesla is getting the same kind of benefit, and you can see some of that here. $35 per kilowatt for battery cell manufacturing, battery module assembly, $10 per kilowatt hour. These are 45X production tax credits. There's also credits for the cost of production, depending on what you're doing. Most companies call this out. This is Tesla's second quarter 10Q. They don't even have 45X in here. You can see that I'm searching that up here. The IRA is mentioned 4 times, but none of them detail exactly how much money the company is getting from these IRA subsidies. They'll say things like the increases in gross margin were primarily due to increases in IRA manufacturing credits and a higher portion of our storage business, but it doesn't detail the numbers. So this is just something to keep in mind when you look at Tesla's earnings, is that they're growing in the energy storage business. I don't think that should be particularly surprising. They do have the biggest manufacturing capacity in the US. They're leaning into that. They're getting all of these subsidies, but how sustainable is that long term? This is not just a Tesla question. This is a question for all the renewable energy companies. So just something to think about. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So in a lot of ways, Tesla's results were pretty positive, but it was not because of the auto business. In fact, I think the auto business looked relatively weak. If you look at General Motors results, which were reported on Tuesday, GM had a revenue increase of 10.5% in the third quarter. So the auto business, particularly the ICE business, is actually doing pretty well. Tesla not growing nearly as much, doesn't have that same pricing power. They're doing a really good job of containing their costs, but most of the growth you see in the business right now is in things like energy storage and then those ancillary services, FSD, charging, but those things are, again, not very high margin. So kind of a mixed bag depending on how you're looking at it. If you're looking at this being, management also said in an outlook, which they don't typically give, and I'm going to quote this directly, we expect to achieve slight growth in vehicle deliveries in 2024. That indicates that they're going to increase deliveries really significantly in the fourth quarter. That would likely come with more price reductions. We've seen them introduce 0% financing in the last week. So really making a push to deliver more vehicles, but that's likely going to come with sacrificing margins. So we'll see what that balance is. Definitely not a stock that I'm interested in at the current price. You can get a company that's growing faster like General Motors at 5 times earnings, whereas Tesla, at least prior to these results, were trading for 60 times earnings. So much, much more expensive. And I think, like I highlighted here, the auto business relatively weak. And there's a lot of questions about the future margins in energy storage and energy generation in particular. But let me know what you think about Tesla's results in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.